Today I'm going to take you with me in the best way on how to trade the London session. Since I've been implementing this basically very easy technique and very easy confluence, I think my win rate has gone up with at least 10 to 15%. So this could be the point that you were missing while you were trading London session before, and this can actually be what takes you from not being profitable to being a profitable trader. So without further ado, let's get into it. So what is it exactly that we are looking for during the London session? And before we start, I want to make some things clear first. My time zone is UTC +1, so everything that I say is in UTC +1. I know ICT trades in New York Standard Time, but I simply don't live in New York, and I think it is quite difficult and unnecessary for me to keep always talking in New York times. So it is very easy to convert, right? UTC +1. So what I'm looking for is I look for a liquidity sweep between 8 and 11 a.m. in the morning. Of course, a.m. is in the morning. Anyway, so why 8 till 11? So at 8, we have Frankfurt open. For the people that don't know, Frankfurt is also his own session, is also his own trading session. It's the German market basically that is opening. Then at 9 o'clock, my time, we have London open. So two very important sessions that are opening right in the morning at 8 and at 9 a.m. in the morning. So both of them, and then I give it up till 11 a.m. in the morning, the time to have this liquidity grab and where I can maybe enter from after we had this liquidity grab. So I'm already mentioning it there. What do we want to see? We want to see the liquidity grab happening. So first of all, we are going to do our top-down analysis. And why are we doing this top-down analysis? Because we want a narrative. This narrative is going to play a crucial role in the liquidity grabs that we are going to be ignoring and the liquidity grabs that we are going to pay attention to. So we want a narrative. We want to have a bullish or a bearish bias, and we want to know where the market is possibly heading to or where it is possibly coming from. So once we have that narrative, we want to see a liquidity grab. This can be buy side or sell side. It depends on which side we are going to trade on. So let's say if we are expecting a bullish market today, we want to see sell side being taken out first before we are taking our move. If we are expecting a bearish market today, we want to see buy side being taken out first before we are expecting our move. So after that, we want to see a market structure shift. And once we have that, we can enter the trade. Now, on what time frame are we looking for this to happen? I personally look at this on the 1 minute time frame, but we're using basically every time frame there is because we're using the top-down analysis narrative. Okay, so with these two things being said, let's take this into the markets, and I will also open FX Replay in a second and do some basically live trades with you guys in my session. So let's go to the morning. This, for example, let's take today. And today, I'm gonna be honest with you guys, I took a losing position. And that's also part of the game, and I'm also being honest about that because you guys need to know that you cannot win every single day. So I've marked this one out right here. This is 8 a.m. in the morning, and from this point on, we are going to look for an entry. People have been asking me what profile I would recommend nowadays. It would definitely be Blue Guardian. They have one of the best prices in the game. They offer an 85% profit split. They do bi-weekly payouts. But what I love the most is that they have this awesome feature, and it's called the Guardian Protector. It's an equity protector that will literally help you overcome your psychological struggles of overtrading and over risk. The support is available 24/7, and they have no restrictions at all on lot sizes, hedging, trade copiers, EAs, you name it. I've done my research and I've yet to find someone that doesn't agree with me. So I would say check out Blue Guardian if you want a reliable prop firm, link in the description. Maybe also very important to mention is that I'm only taking trades from 9 a.m. in the morning. So as you can see right here, this is 8 a.m. and now let's say from 9 a.m. in the morning, right here, this is my entry point. So now I want to see sell side being taken out. Maybe let's start with the higher time frame analysis first, but this was the entry time frame anyway. And basically we came up very aggressively on the daily. We started consolidating right here a little bit. We are in this daily, order block zone as we can see. But what I favored is that I favored basically this one right here, and I favored it because it is buy side liquidity that has not been touched yet. So overall, weekly wise, I am bearish on EU, but I want to see this buy side be taken out first before we go lower. That was basically my whole story, the thing that I was anticipating on. But before we were going to this buy side liquidity, I was thinking we have this 4-hour order block right here, and that was basically untouched up till today. And my belief was that we were going to tap in this first, take out buy side liquidity right here, take out the bigger buy side liquidity, and then move lower. If this is going to be the play, don't take my word for it, but This can still happen, of course. So now that we have all of that, we can also see that buy side liquidity was taken out right here. We had a lot of buy side up here that was taken out by this move. So basically everything for me and my narrative and my story was pointing for me that I was going short. So we know we are going short. So what are we going to do? We're going to wait for buy side liquidity to be taken out. Then we're going to take sell positions. So what happened right here? Right here we have some buy side liquidity, as this was the high of a pullback that broke that previous low. Of course it is on a very low time frame, so being devil's advocate, it doesn't hold a lot of value. I'm gonna be honest with you, Dan, that's most probably where I went wrong anyway. But the rules are the rules, so that's why I basically entered. And then I have two scenarios. Or I enter right away when I have the market structure shift, or I enter on a fair value gap. And my entry was, by the way, here. It was literally on the pip, right here. And the mistake that I did right now that I'm seeing is I didn't wait for this buy side liquidity to be taken. I only took this one right here, this high right here on the 1 minute. And looking at it in retrospect and a higher time frame, I would definitely needed to wait for this high to be taken out at least, purely because it holds a little bit more value to it, as it was the highest point that broke these previous lows right here. Now that being said, I did this and then my stops were above these highs. So I was stopped out. There was a trade. Of course, this happens. It doesn't really matter. But what can we learn from this? Right here, buy side gets taken out. There is no market structure shift yet. No market structure shift yet. No market structure shift yet. Let us see, is a new high created right here. And this was a low that created this one. So this is where the market structure shift happened. This is the lowest point that broke the previous high. As you can see, this high, yeah, it did also break this high. It did, as you can see, it wicked above. I really want to see a body candle close above it. So once this low created this one right here, and it did make a body candle close above it, then a body candle close underneath it, we can speak of a market structure shift. And then we're going to basically search for an entry. So buy side was taken out at 9:30. Liquidity got taken out once again right here, but it doesn't matter what counts for our buy side liquidity. This is important for the market structure shift right here. And then the entry, you can take it right here on the market structure shift. That's basically what I like. I put my stops above the high, and then I target a higher time frame point of interest. So in this case, it would be this OB right here. Now, I wouldn't have taken this trade realistically, as this was pushed by news. It was pushed by PPI today. So this is where I stay out of the markets. Then let's see, let's go to yesterday, and I'll do one more example, and then I go into average replay. And take it a little bit more to the realistic markets instead of going into hindsight. So let's go, for example, to yesterday. Yesterday was Wednesday right here. So Wednesday, I would say it was quite a conflicted bias, because we could have had both scenarios. We could have gone back to this OB, basically what I was targeting today, or we couldn't have gone back up higher to take out this buy side liquidity up here. So what do we need to see in both scenarios? We need to see that buy side or sell side have been taken out. Then right here, you have your 8 a.m. So this is your Frankfurt open. Buy side liquidity gets taken out right here. And guys, how do I determine what is buy side and what is sell side? Of course, if it is on the buy side, so on the top side, it is buy side. If it is on the bottom, it is sell side. How do I determine which highs to take or which lows to take? Always look at it market structure wise. So if it is a high that broke a previous low, I can see this as a buy side, because this would most probably be a place where traders that are short are putting the stops above. Now, if it is a low that broke a previous high, that is why I consider it sell side, because this will most probably be a place where buyers put their stops underneath. So for example, right here, this is a low that came after that pullback and it broke the previous high right here. So this is a good sell side point, but this is an even better one, as this is exactly the lowest point that broke this high right here. So what happened in these scenarios? Right here, price got taken out. It went down very, very aggressively. Right here, sell side got taken out. It went up very, very aggressively, as you can see. Then again, buy side gets taken out. See, this is now the highest point that broke the previous low. So this is our new buy side. And then it went down to sell side once again, and then it went up higher. So how could you have traded this? If you were a complete lunatic, you could have traded this every single way upwards. As soon as buy side got taken out, you can take it up to sell side. As soon as sell side gets taken out, you can take it up to buy side. But there is a very important thing right here. There is no available market structure shift, as there are no highs in these price legs. So the only correct way to have traded this was to wait for a market structure shift, and this is the one that you got right here. Market structure shift right here. You could even say market structure shift right here, as this is in theory a low that broke the previous high. But let's say for being safe, let's just take it like this, and this was your trade, right? Only a 1/1.4, not that big, but if you would have considered the higher one, you would have a larger trade, of course. But then, if you would have traded at the long position, as I said, it was a conflicted bias, so I would definitely be open for both of them. You had a market structure shift right here. Then you are taking your long position from this place, you're putting your stops underneath the low, and then you go to a higher time frame to see which higher time frame point of interest area you have to target. Where were we? Right here. And then it gets interesting, right? Because this is the first target that you have. These heights right here. It's a 1/3.2. If you would have targeted the buy side that we were talking about right here, it's a 1/4. If you would target these highs, and let's say if you believe that we were going upwards, you could have even targeted this one, right? Of course, don't be targeting these massive trades right here. It's not the smartest thing to do. Just go for the nearest buy side liquidity that you see. Just take enough with this. A 1/3 is plenty. It's a very, very big move, and you should definitely be content with that. So now let's go over to FX replay and put it into practice. So I've opened up basically the session where I've been backtesting this on, a very new session. And as you can see, it is just, I can only go forward. For the people that don't know FX replay, I can only go forward, I cannot go backwards. So no way to cheat this for me. The account is on 125, that's where we're at. We are 25% profit over a span of, I think, 20 trades or something, maybe a little less. So let's start. It's been a while since I've backtested on this session, so let's start from the beginning. Where are we at? Let's go to the weekly. Weekly right here, as you can see, we have some sell side liquidity right here on the daily. And we have a daily fair value gap right here that has been tapped into. So I'm overall going to be targeting shorts higher time frame wise. Purely because we have a weekly fair value gap right here. We have the sell side liquidity on the daily right here that is quite close to where we are right now. The daily fair value gap has been filtered as higher right here, or has been touched at least. So let's see. Now we are in a daily order block. Let's see, 4 hourly low right here. So most probably we'll have some kind of reversal and then maybe go lower from there. So we have a 4 hour fair value gap right here. Let's see, we have a 1 hour, what the 1 hour is doing. Okay, so as you can see right now, it is 5 p.m. in the afternoon. I'm trading the London session only. So let's go to the London session. Bam, there we are, London session. That's what I love about FX replay. You can just do go to, bam, London session. It's just so easy, and it will make life a lot easier when backtesting, believe me. So now we're going to see, and we're going to zoom in 8 a.m. in the morning. That is basically where price is at right now. Let's go to a 1 minute and let's see and analyze what price is going to do. Okay, so right now price took out this low right here, but this was 7.56, so we're not counting that. So we are short bias. So if we are taking our buy side, that is right here, it could be a good selling point for us. The only thing that is bothering me is that we have this 4 hour fair value gap up here, still open. This could turn us still bullish. So let's see, 1 minute. Okay, we're going very bullish. Of course, this is not a liquidity graph, this is just a complete run. So it is waiting for us right now. Okay, so price might be able to take out this low. There we go, it took out that low. If we have a market structure trend bullish right now, I'm probably trading it up to this 4 hour fair value gap. Okay, again, this is not a liquidity grab anymore. Maybe this was a grab. As you can see, this was a grab. I was just not seeing it. So how could you have traded this? Damn, how did I not see this? Okay, this was unfortunate. This was very unfortunate. Wow. And I was just too zoomed in on the 1 minute, I guess. So, liquidity grab right here. Market structure shifts right here. And this way you can take your trade lower. So the trade would have looked something like this, right? Market structure shift you have right here. Take your trade, you can put it above the high right here or above this high. I would say this high is plenty because there's basically no reason for EU to pull back higher. And you need to target the first sell side that you find. Now we're taking out these lows right here. If we have a market structure bullish, I'm still probably willing to take long. Let me see. Is it a good one? Most probably not actually. I think we're just going to let it go short. And there's also sometimes the case, guys. If you miss a trade, you miss a trade. It's part of the game. Yeah, okay, so our time frame is over, and since we're only trading the London session, I'm going to the London session again. Let's see on the 1 hour. So we went very much short right here. Also a 1 minute break of structure right here. Now we're pulling back. Let's see on the 1 minute what price is going to do. Now we have this high right here. So this would be a very good point for us to see be taken out. Okay, so price took out this high right here. Now let's wait for London to open, and let's wait for a market structure shift to happen. We already have this one, so now it's only waiting for London to open. I hope the move is not gone before London is open, but most probably it will. Okay, there we have it. London gives us a new point to enter. And in theory we could enter already because we already have this market structure shift. So that's also what I'm going to do. I'm going to take this as my entry. This is my stops above the highs, and I will be targeting these lows right here. Let's take the entry, place order 1%, market order. Okay, we are stopped out unfortunately. Let's see what price is going to do further than this. We had a sell side grab right here. It moved upwards from there. Maybe we are going to reach that 4-hour fair value gap, and there we go, we do. Maybe we are going up a little bit higher again into this OB right here, 1 hour OB. Let's delete this one, and then we're going short from there. Okay, let's go to the London session. So 1 hour, we are still bearish. If I would look at it like this, this would be a very good place to buy though, at a 1 hour OB. But I would say we're still bearish. Price took out buy side right here. So now we can enter this position like this, and we are targeting the OB. Place the order, market order, and there we go. This was a very quick continuation trade. Let's see if London has something more to offer. Here it gaps higher, and it takes out this buy side again. Okay, let's go to the next London session. Let's see, are we still, yeah, we are still going lower, I would say. We have broken the previous low. We have made a pullback, and now most probably again targeting that previous low. Pretty much the same trade as we took the previous day right here. So we want to see buys have been taken. That's right now the case. And price is already moving before London could even come close to it. Sell side got taken out. We want to see a good entry, most probably something like this. And this is where I will take my trade. Now we're targeting the low that was created down here. 1/2 position, place order, a market order. And there we go. Very quick continuation trades. I hope this one was clear. We took out buy side liquidity right here with this move at 8 AM. Then basically nothing changed. So we were just waiting for a pullback to happen. And that is what happens right here. You could have taken a much better position if you would take it higher, but I was waiting for that reaction to happen off these highs. And we got it with a very bearish displacement move right here. So we take the entry, stops above the high, and then the target was right there on these lows. So these were some quick trades, very quickly, 3 positions. Let me show you the analytics as I've been backtesting this. So yeah, the 20 trades, 63% win rate. Of course, 20 trades, 19 trades is nothing, but it goes to show that I would say it is a very good technique to enter trades, to take continuation trades if you have the narrative right. If you are seeing this right now, I've opened a free school community where you can join. It's the first link in the description. I will go on there and will upload backtesting videos of this strategy, of other strategies. So you can come in and join. It's completely free. This way you can communicate with other like-minded individuals like you and that are also following my channel and are also inside of this school community. Guys, I hope you enjoyed this video. I hope you learned a thing or two, and I will see you in the next one. Bye bye guys.